Hello everyone, welcome to Smart Investing. My name is Albert and today's video is on the automobiles and truck parts industry. Today is, today's May 14th, 2025, and we're going to go over these five stocks. So, first stock up is NIU. Market cap 278. Volume is at 417. EPS 0.33. So we have here 52-week high and low of about not even $5. Looking at the chart, pretty much a downtrend. We're gonna move on from that. Financials. So they were positive. Oh, so they're only giving me results from 2021, 2022. Let's see if we can get some more updated results. So ROA, ROE looks pretty bad the last 3 years. Earnings look pretty bad. Net margins bad. Debt has gone up. Net income in the negative. Balance sheet looks okay, but again, just plenty of issues. So we have here a bad investment. Definitely a bad investment. So that was ticker NIU, bad investment. We're going to move on to the next one. So again, short term and long term, bad investment. Next one up, MKDW. MKDW, I mean, right away, this chart just pops out. We went from $10.80 all the way down to about 1.59 in like 3 months in 2024. And it has gone down from there, from that point on. We have market cap 45 mil, volume 320, 52-week high and low of about $16. Earnings negative, forward-looking earnings or anything, nothing. PE ratio, nothing at all. I don't have much information to go on, just looking off of it of basic info. We're going to look at, obviously, a little bit more analysis. It's not showing me much. Obviously, from the charting, looks bad. Pretty bad numbers. I wouldn't say overall. So fundamentally, let's just go over this. Not going to take too long. I evaluate pretty fast. Earnings have gone down. Net margins down last 3 years. Debt, that is pretty bad last 3 years at 158. With a number like that, this company is in some serious trouble. And by the end of the year, 2025, if that number has 3 digits like that, they shouldn't even be in business. But again, it's open market, obviously on Wall Street. It's going to take time for a company to recover and keep doing what they're doing and making bad decisions with bad management or whatever it is that's going on in this company. But again, the numbers don't lie. Numbers don't lie. Net income, revenue has gone down even significantly from 2023 to 2024. It's pretty awful. Pretty awful company. Cash flow, definitely bad management and issues here. Definitely a bad stock and a bad investment. So that was MKDW. Moving on to the next one, ECDA. So ECD Automotive Design, we had a price of 10.8 in 2023, and basically the start of the year dropped down, and then it just went down from there. Price is at 50 cents. Volume is at 1.39. Market cap is at 17.84 million. For the time being, stock is active, but even for the short term, yes, it's gone 41%. But again, that is way too risky to jump into. Well, for me, to jump into a stock like that, just to make 15 cents and you're buying at whatever. Um, yeah. Uh, Book value 0.59. Nothing on earnings at all. Uh, just that the earnings are negative. But the value for this company or forward guidance, anything, it's not showing me anything whatsoever. Chart showing me bad sentiment. It's just obvious. We're going to look at the analysis here. Obviously, Wall Street has not even looked at this based on one analyst. Insane. We have here negative earnings. I'm not even sure why. Look at this difference. We went from negative and then almost all the way to, I want to say positive territory, but same estimate from 2023 that they're trying to give this company. Let's look at some more uh, info here. Earnings are negative. Margins are horrible. Return on equity, debt, again, with numbers like these, not only for last year or the year before or 2022 or 2021, numbers like that, that's serious ugliness. That's horrible. Horrible, horrible. A company like this should be out of business. Again, you have over 100% debt, and then your debt is only not even being paid off. Like, it's just going up and up and up and up. It's pretty horrible. Uh, the revenue is going up. I'm surprised it's not even flat. So it doesn't even look like they're paying off debt. Like, how is this company even surviving? Balance sheet obviously is horrible. Cash flow, I'm sure they're going to have cash flow issues with that amount of debt. Even if they're positive, they're not using their cash. Yeah, this company is definitely mismanaged. Moving on to the next one. Yeah, they're getting in only what? An extra, even if they went up 40%, what? An extra what? 10, 12 cents? I'm surprised this stock is not delisted. I don't know why this stock even exists at this point. So again, ECDA, terrible investment. If you're gonna look at this company, it is horrible, horrible, horrible. So all these three are pretty bad. Next one up, EVTV. 25 cents for this company. Oh, let me get comfortable. Oh, there we go. Sliding off there for a bit. Market cap is at 5.96. Volume is pretty low. We have here downtrends. Even for the last year, really big drop. 52-week high. It's only like a $2 move. That's pretty bad. Earnings, pretty bad. Forward guidance, they're predicting positive. I don't know. I'll say by the end of the year at 0.64. Who knows? But this stock at a market cap at 6 million, I mean, it's pretty bad. Pretty bad. We're gonna look at the analysis here. Nothing really for quants. We have actual estimates. So we have positive, then we have a miss, then I guess it's a beat. Since it landed on expectations, then we have a beat. And then last but not least, I guess that was in 2022. So they're not giving me actual estimates and actual miss or beat estimates for current data, but I could get that from the key indicators that I have here. So ROA, ROE, negative margins. I mean, horrible, horrible, horrible. I don't know what is going on. The debt is actually not bad. Not bad. Not bad. These are awesome numbers to see. So whoever's managing this company is actually managing pretty good. See, this is what I don't understand. You have decent companies that are actually trying, just by the numbers, they're trying to keep their debt low or pay off debt or stay away from that. And then all you need is the market to, actually realize that the company's actually trying. But this company hasn't been analyzed. What are we looking at here when it comes to analysts? How many analysts rated this? Oh, I don't. It's not giving me that info. So let's look at the company. Let's continue looking at the company. So again, the number one factor, I would say, I mean, anybody would say this, but typically it's the debt that creates the whole issue. If it's typically a decent company, bad or good or whatever. We have here net income. Yeah, they're not profitable, but they're trying. They're trying to manage their debt. Revenue, yes, it's gone down, but that was because of how the market is anticipating things and how the market worked out. Balance sheet. I mean, you cannot complain. You cannot complain at a balance sheet like this. 2020, they have a ratio from 6 to 1. This is insane. A ratio of 75 to 2. 75 million in assets and not even 2 million in debts. Then in 2022, 33 to 2. 2023, 22 versus 2. Then this is where things started getting tricky. 2024, still good, but again, from 2020 all the way to 2023, hopefully they didn't get rid of management that was supposedly doing a pretty good job of managing this. So balance sheet says a lot. Cash flow, we have here, let's see if they're positive or negative. Cash flow is actually positive. So I guess they're probably using their cash flow to cover expenses and everything. So this company, again, it's a bad investment, but in the future, by the numbers and even the past 5 years, they need just a little push. That's it. They just need a little cash buffer. I mean, the management, I could tell, the ROA and their ROE is crap, but they're still trying to manage debt, which is pretty awesome to me, I think. So what I have to say is, analyzing this company, again, I've seen a lot of companies where their debt, and you just saw it, the last 2-3 companies, their debt is crap. They don't know how to manage. And then they still expect to beat earnings and to get, positive sentiment from Wall Street or other investors, institutions, whatever. And then this is the insane part. They succeed. And then we have companies like this, EVTV, looking at the numbers, that actually for the past 5 years, they've been managing pretty good. They just need an extra cash buffer or raise money somehow. So again, EVTV, bad investment, but it just needs a lot of work. So this is a company, maybe in the future, it could do better once people start investing in it and take a little bit of a hard look at it. But again, it just needs the right people to invest in it. Again, it's not like I looked at the name first. I'm not looking at the name. I'm looking at the numbers first. And then you're looking at the industry and what it turns out to be. So anyways, hopefully the stock in the future can be better. We're going to move on to the next one, GTX. So Garrett Motion, GTX. I mean, this is pretty insane. Look at this foolishness. From $9 all the way to about $12. This one move alone wiped out, probably for the last week or two, for those 2 weeks that it went up, wiped out everything, all those gains and losses. Pretty much that one move did better than anything for the past year. I mean, how is that even possible? We have an active stock, okay, at 1 million, market cap at 2.44, valuation right now at $12.04. Now, let's look at the analysis. Obviously, Wall Street's going to say it's a buy. Looking at the chart, I'm not going to go too advanced into it, but let's look at this chart again. Last 5 years, pretty flat, and then all of a sudden it just takes that one whopping move, and that's it. Probably earnings. One was earnings on May 1st, but it went up before that. Pretty insane. Went up a few days before that. People probably bought in. Look at that guilty proof. So we have earnings on 5/1, but then yet it started to go up a few days before. Doesn't that look like market manipulation right there? So we have pretty much a third of the move. We have a third of the move that goes up before. And then on earnings, it continued it. And then after earnings, so before, during, and after earnings. This looks pretty suspicious to me. Again, the earnings, then that push from 9 to all the way to 12. And then again, that move within that week or two wiped out everything that was good or bad in gains for the whole year. And possibly the last 5 years in that 1 or 2 week period. Yeah, that's pretty chaotic in my book. This is crazy. This is craziness. A lot of people see gains because people forget that they're greedy. And I see market manipulation easily with the numbers. The charts don't lie, the numbers don't lie, the data does not lie. I mean, everybody jumping in on the same stock, I get it. But again, with that information there, I mean, it's pretty crazy. It's pretty crazy. Earnings, they beat, they miss. They beat by a huge margin. Then they met expectations. Now we're waiting for Q2 2025. Moving on to the next data, we have here ROA positive, ROE negative, 1.25 in 2024. And they were negative for their earnings last year at 0.3. So with that move alone, 500%, it's crazy. So in the last 5 years, they were negative in 2023, but magically, they went from this to this. Net margins, about the same. Their debt, again, this is a company. Another company doesn't know how to manage a company. Whoever the managers are, CEO, corporate, whoever the hell is involved with this, look at these numbers. Not even for 1 year, 2 years, 3 years. Last 5 years, the numbers don't lie. Over 100%. And still, whether the company was over $1 or not, these numbers are pretty horrible. I don't know how and why this company is still cease to exist. Cash flow issues. 408, yeah, negative cash flow. So obviously a bad stock, market manipulation, and people can disagree with me on that. But again, yes, the volume is active. But again, how active was it before earnings, during earnings, after earnings? And then again, the numbers don't lie. And they're gonna pay out a dividend. This is the first time they paid out a dividend on January 15th, 2025. This is a Switzerland-based company, automotive technology. So, what are they doing? So, okay, manufacturer sells turbochargers, electric boosting technology. So there we have it. We have this company, GTX, that's currently very suspicious. So, anyways, all bad investments, but one just needs work with a needed cash buffer. Other than that, that's all I have for you guys today. Thank you guys for watching. I'll make the shorter version possibly tonight, hopefully tomorrow. I'll see you guys in the next one.